After all of the obsessive sort of conversation as the president went into the White House about what this Fed would look like, it looks pretty much the same as the one that came before him. Is this a big change for you?
I don't think it's a big change for me. I think it's a very pragmatic and practical Fed, which I think is, frankly, a good thing. And I think it's really of no surprise to anyone. There's no one controversial. We mentioned some names during the break that would have been more controversial, like Kevin Warsh. We didn't get that. I think it's a good Fed. I think they're going to be very practical in their approach to monetary policy.
And Stephen Wieting, to your point, I guess your big takeaway as well is it's not Kevin Warsh.
Yes. I mean, this is one example where the administration is not adding to global market volatility for monetary policy.
And just in terms of the sort of credibility of the people that have been selected, Diane, they're fine candidates, but it's certainly no Stanley Fischer, and it's certainly no Janet Yellen. Right. Some people might say it could be the B list, the C list possibly over at the Fed, but decent candidates nevertheless.
Very stable, very smart, market savvy from PIMCO's point of view, as well as deep in the bench in terms of monetary policy. I think there's going to be unanimity, and that's important going forward.
And just in terms of what it could mean for policy, of course, we've caught up with Rich Clarida many a time, a friend of many of the programs here at Bloomberg. He gave us his expectation on rate hikes in 2018 on Bloomberg TV back in December. Take a listen.
My baseline view would be 2 to 3 hikes. I think we could get 4 hikes if the growth in the economy is stronger because of the tax cuts. But importantly also, I think you'd actually need some indication that inflation is moving up too quickly for the Fed's taste. So I think it would be tough to see 4 hikes, but under a booming economy with high inflation rising, that could happen.
Stephen Wieting?
So we're running a bunch of experiments on the U.S. economy now. Unprecedented things that weren't done since, the 1930s in terms of tariffs, at least in a small way, at least. Tax cuts that are happening late in an economic recovery, trying to revive both supply and demand in the economy at the same time. So monetary policy is not one of those experiments.
Quite clearly. Peter Cecchini?
Well, I'm not sure I agree with that. I think monetary policy has been an enormous experiment, and I think the literature, Richard's literature, for example, on R-star, some of his stochastic work trying to make the models a little bit more dynamic and a little bit more global, is a recognition really over the past couple of years that monetary policy is now very global. And that we need to take a global approach. And he's written I think very concisely on that in recent papers on the PIMCO website. So I think monetary policy is still very much up in the air in terms of where we are with rates, what the ECB is doing. And I think it's still very much an experiment.